Yeah, so good afternoon. Welcome to Sunday Dublin. We warmly welcome Diego from RSK, a good friend of mine for the last 2 days, 2 years, more than that. We are all intrigued in some extent because RSK is one of the pioneer going back to 2015, 2016, the first, not just from Latin America, but is embraced the blockchain technology specifically for the Bitcoin blockchain. We are very honored to have you here, Diego, today, and we'd like to listen to what you have to tell us about a number of the topics, especially what's in your heart about how to bring Bitcoin blockchain into the financial services and the economy. The floor is yours, Diego.
Thank you very much. Let me share the screen. I'm very happy to be here, and I think my conversation or my presentation will be about how I think Bitcoin is evolving into the financial infrastructure of the future, and trying to create like the foundational concepts of why this is happening, and of course what we do at our organization IOVlabs that started launching RSK, a second layer to Bitcoin for smart contracts, and then the RSK infrastructure frameworks, different peer-to-peer protocols that build on top of that. It's defined by that vision, but we think this is a broader phenomenon that involves multiple networks, multiple technologies being developed. So I will try to give that like broader vision where we fit, and we are one of the main actors driving the development of the technology, but we are not alone. It's a myriad of networks and technologies that are being built. So hopefully I will share that vision, and then we can have some Q&As and debate deeper into the concepts. Let me start the presentation. So there we go. Can you see the presentation now? Is it good?
Yep.
Excellent. Oh, I think there we go. Okay. A very brief background of myself. I've been working on disruptive technologies for a while. I started in the web development in the 90s, 1995. I started doing web development, very early days. So I lived the disruption of the web in our society from the beginning, almost from the beginning. And I think in that sense, what we are seeing today with blockchain and cryptocurrencies is part of the same movement, is part of an innovation cycle, like Schumpeter likes to describe, that started with the integrated circuit, then evolved into computers, and then into computer networks, the internet, and all the things that we are seeing. And this innovation is disintermediating many of the aspects of our society. So in that sense, when I found Bitcoin in 2012 and started like fully devoting to it, for me the connection was clear, and for me it was an evolutionary step on top of those things or ideas or interests that we were trying to pursue back in the 90s with the early web pioneers. And if we think about what happened in the last 30 years or 25, 30 years, it's incredible that today we can access all the information in the world. We can access, communicate with anybody in the world, and we can do that from the hand from the palm of our hands. No, it's like something that if you told me like 25 years ago was going to be possible, we could think that was like something of science fiction. No, it was like impossible to think that in a world where we are using personal computers, maybe a billion users were accessing personal computers. The monitors were like huge boxes, very heavy boxes. To think that we will have portable access to the internet and instant communications with anybody in the world was something unimaginable. No, but that happened, and that's part of our reality. And the new generations don't even think of a world without that kind of connectivity. And that brought to us uh, disruption in many industries. Being, of course, access knowledge, as I like to say, was the first to be disrupted. So, encyclopedias were replaced by wiki and online sources. And we know that today we can access and learn online a lot of the most important trades of our days. It also, of course, disrupted the entertainment industry, the communications industry. Telcos were dominating the communications industry, and all the rules, all the regulations around telecommunications were bounded to the limits of the nations. And suddenly companies like Skype broke all the rules and started crossing those frontiers without asking for permission. And they were the early pioneers that enable us today to have instant communication at zero cost for any human being in the planet that has access to the technology. The same went on the media, because the societies found the voice of their own through social networks, and then the press stopped being the only communication channel to represent the voice of societies. And the same happened with the entertainment industry, where they had to change the model, where they were distributing physical copies of the movies and music, and start thinking on new business models based on taking the artists back on the street, on the road, and creating subscription models. And well, now that all that is history. But there's one thing that this Internet of Information didn't touch at all. And that one thing is the financial system. And very likely when people thinks, okay, but we have online banking for a while. I've been buying things on online stores for a while. Why you are saying that it didn't touch money or didn't touch the financial system? And the truth is that all those systems that we use on daily basis today are only interfaces to the old financial system, and the old financial system works with the same rules that has been functioning for the last 300 years. So it's not an actual innovation in how finance and money work. It's only providing new interfaces for an old system. And that system, it's composed of multiple value networks that are interconnected via legal agreements, contractual agreements. So all these networks and all this functioning is based on one concept, that is a trust intermediation, no? An intermediary we trust. So basically, all these intermediaries are organizations we trust with our money, and they are actually handling our money. And every time we send a command to an online banking system to do a transfer, actually we are asking our bank to update the balances on our account, and at the same time, hopefully in an atomic way, also communicate with another bank or update the balance of a user of their own bank, increasing the same amount that is being removed from our account. So conceptually, all the models that we have in the traditional financial system are based on trust on third parties, are based on custodial models, are based in this intermediation. And this is something that is not new. I mean, in the same way, we used to do that with Marco Polo. We used to give Marco Polo our gold in Venice, and we would get, almost the same amount of gold in Beijing via a banknote or a paper sign or with a seal from Marco Polo. So conceptually, what Marco Polo was doing was exactly doing that. He was the one who managed the routes between Asia and Europe, and he would take the risk of custodying the assets, moving the assets between nations, and in exchange of that would charge a fee of our transaction. No? So we would be removed from the need of moving the assets ourselves. And I think that model was very valuable for society. Indeed, it enabled the society to become the global society, global financial world we have today. But it failed to serve any human being in the planet. Indeed, we have half of the population that is unplugged from the financial services, the basic financial services, or is completely underserved. And in big part is because these intermediaries not always speak well between them, among them. No, so given that they have maybe different regions, they have different regulatory environments, they have different systems, they don't communicate well, and also these models based on trust require insurance, require certain systems to compensate for potential breach of contract of any of the parts. So that increases the cost of the system to a point where we are now, where the system can only serve in its current form to half the population in the world. On the other hand, and I know this is maybe not so problematic in the first world, but when you see that in the third world, in emerging markets, you see that these intermediaries, when they accumulate enough power, start serving themselves instead of serving those who delegated their power or money into them. And in cases like in Argentina, where I'm from, we had bail-ins where all the people had the money in their banks locked for a year without being able to access that money. And when they got access to the money, the purchasing power of that money was 1/4 of the money they had one year before. Well, you have extreme cases of bankruptcy because those intermediaries didn't do proper risk analysis, or they took risks that were beyond what was reasonable. So the other big problem of intermediation is that intermediation, when it reaches points close to monopoly or oligopolies, then starts to creating incentives for corruption. So the big question is, why, if the Internet of Information could change so many industries, could not change money and value in general? And the main reason is because information, it's replicable almost with no cost. So the Internet of Information is an Internet of abundance. It's not an Internet of scarcity. And when you want to represent value, what you want is a scarcity. So we didn't have the means to create digital scarcity. And this is what led the entertainment industry, as I mentioned before, to change their business model, because their original model based on physical distribution of the songs or movies was a way of creating scarcity. It's the only way in the physical world, scarcity is the norm. So in the physical world, if you didn't have access to the CD or DVD or any other transfer medium, then you wouldn't have access to the music. But suddenly, where all these physical goods started to be digital, people could start copying them, to their friends, family, anybody, almost at no cost. No, and that is kind of the challenging thing. Is like how we have money or valuable things in a digital world. And this didn't have an answer for many, many years until 2008. And then something happened that, in my opinion, was, marvelous, or the work of a genius or a group of genius, that somebody cracked the problem of digital scarcity. And that's when Bitcoin was born. And very likely when I talk about Bitcoin, people think like, okay, but I think Bitcoin is a currency or kind of a scarce asset, digital asset, and that's okay, because when you see new disruptions, usually you try to connect what you are seeing with what you know. No, I had a professor in art history that was telling us like, you only see what you know, and that's why I put the Parthenon, because if you go there, you see a lot of rocks, and maybe you don't understand that that's the cradle of Western civilization. But if you know the history, you understand what you have in front of you, and you can have a deeper understanding of what you have in front of you. And this is a normal process. Like, disruptive technologies take a time, first, to absorb them in the form of, an evolutionary step to what we have, and then as a tool for progress and evolution into new models. And this is something that happens to us many, many times. I always use this this image because, I recall the days when we have the first home computers, and we thought that computers were merely powerful typewriters or typewriters on steroids. And now we know that computers are much more than that. But the first approach was saying, okay, let's use Word or any word processing system, because that was our analogy to what we knew. The same happened, to very brilliant people like Paul Krugman. He didn't see the value of the internet, for example. He thought the internet was going to be a fax machine. No, so in 1998, he anticipated that, in 2005, the internet was going to have the same impact as a fax machine. And now we know that it's a little bit more than that. But again, it's like, even if you're brilliant, even if you are well educated, you will miss on deep innovation cycles. No? And it's true that Bitcoin is a payment system. So you can do this analogy. You can say, okay, it can be used as a payment system, as a global remittance system. And all these companies and many more these days have used Bitcoin as a payment system. Many of them were not keeping Bitcoin in their balances, in the balance sheet. They were just like receiving the Bitcoins because it was a very efficient way of moving money across borders. But then they were liquidating locally the Bitcoins and getting the local currency, whether it was USD, euros, renminbi. So that's one element of what Bitcoin brought. It's like a global remittance system without intermediaries, without minimizing trust, minimizing trust on third parties. Also, you could say that Bitcoin, because of its model, is digital gold. It's scarce. You have full predictability on how many Bitcoins will exist at any time, any point in time. So that scarcity, fungibility, different aspects make it very similar to gold and make it so far a very good store of value for mid to long term. But what I wanted to share with you is something that goes beyond these two attributes of being a remittance network and being a store of value. because I think Bitcoin is the foundations of something new. And the foundations of that something new rely on the combination of three technological developments that by themselves are not necessarily disruptive. But when you combine them, you get these systems of store and transfer of value without intermediation. And of course, the first one, is the blockchain. That is one of the most hyped words in our ecosystem. But if we think deeper, what the blockchain is a data structure that enables us to have a ledger with great auditing capabilities. I mean, this ability of the blockchain to enable like spotting, almost instant spotting of changes within its data, make it a great auditing system, no? Because the blockchain has this quality where each one of its pages or blocks, it's linked to the previous one. That's why the chain concept. So what that creates is that if I change any page in the past, that will create a domino effect in the following pages, creating this audit trail. But if I have a blockchain in a single computer, I have at best an immutable database or a database that only moves forward, that cannot be rewritten on the back. It can only be updated, but not rewritten. But we have a problem. If we have that database in a single computer or institution and a hacker gets in and changes that blockchain, we can see that the blockchain changed, so we can audit that the blockchain changed, but we don't know what was the original version. So for the practical uses, we cannot trust the database. So since the 80s, there have been work on distributed computing, and some protocols have been developed, like Paxos, for example, that would enable like multiple servers to have a copy of the database and have an upgrade mechanism among them, where if 2/3 of those servers remain honest, then I would know what was the right version of this blockchain. If we think of that, that could be the evolutionary step of SWIFT, of the banking system, the international banking system, because that would create a system where all the participants in the SWIFT network would have copies of the SWIFT database and do independent validations of the state of the network. Those trusted members would have, of course, good security models, good security environments. So that could create like a very, very safe and, if those participants will, very transparent network. But still, we will have a point of trust, because we have to choose the participants in the networks. And every time we want to reconfigure that federation of servers, we need to make a decision that is centralized. Somebody needs to control the definition of who is keeping the custody of the ledger or the update, the maintenance of the ledger. And that's where the other disruption that Bitcoin brought, which I would say is the first time we have that in human history, appears. That Bitcoin combined decentralized networks, this concept of like having multiple ledgers where all of them are validating the state of the network independently, and protocols that stream the information all over the network until the network gets to consensus. Combine that with what is called the proof of work, which is a mechanism by which anybody can be part of the updating mechanism of the ledger, as long as they do an economic contribution. That economic contribution is seen in the form of buying hardware, operating the hardware, paying for the electricity needed to run those servers. So what we have is the first network where the control of the ledger is open. You don't have control of who participates. You only, as long as those participants, fulfill the rules and do the economic contribution. So by using this game theory model where participants have to do an investment in hardware, an investment in operating the servers, and then they get the prize in the form of new Bitcoins and transaction fees from the network, Bitcoin is creating the first truly open and trustless system to store and transfer value. And when you combine open blockchains that are open in the sense that anybody can participate in them, that are protected by decentralized networks, that's when something new emerges. And in my view, that something new is the Internet of Value. So much as we had the Internet of Information already running and as part of our lives, now we have the Internet of Value. And by definition, an Internet of Value is a network of networks, no, for the transfer and store of value. And this is a key element because in my view, what we are seeing is that after Bitcoin, new networks are appearing. And now we are seeing in the recent years, interoperability becoming more widespread and a focus of development. So we are having more and more interaction between these networks, and the networks have different functionalities. And to analyze those functionalities, I created a framework, a mind framework to try to understand what are the responsibilities of these networks and attributes of these networks. And much like in the Internet of Information, we had like, of course, this is a very, very raw abstraction of the OSI model, but conceptually what we did is we first created protocols that would enable computers to communicate peer-to-peer. There's some layers that are hidden here that are the physical layer, but conceptually the first relevant part that enabled the Internet of Information to appear was like the ability to connect remote computers that were not within the local area network, to communicate and exchange information in a reliable way across long distances. So that was like the first innovation. But then we started creating protocols that will mimic the things that we were doing in the physical world. So we say, okay, we have mail, let's do electronic mail. We have, phones, analog phones, communications. Well, let's do instant messaging. Let's do, voice over IP. Let's replicate the human communication protocols. And then after a while, we started having also emerging protocols. We said, okay, how we can use these to interconnect information. And that's when the web started. So we had protocols that were not mimicking traditional things, but were building up on the basic communication protocols. And then we had emerging patterns. No? So we had social networks that from a technological perspective were possible in the 90s, but it took us like maybe 10 more years to get to a point where social networks emerged, because we needed first certain conditions. I think mobile devices were key to enable a broader interaction with the internet, and also interaction with the internet from the places where people was, instead of the computer desktop, which was like limiting the kind of interactions with the internet. But also I think because we need to mature the understanding of the technology to build these new emerging patterns. And in the same way, I think the Internet of Value is being built in layers, where the first layer is the store of value. And Bitcoin was fully focused on that. It's a network that is only focused on a store of value. And when you choose one of the layers, you have to sacrifice things, no? Because the store of value wants to maximize security, and there's if you want a triangle that you have to choose which things you will prioritize. So if you prioritize security, you have to minimize the functionality, because more functionality implies more surface of attack. So you want to minimize functionality, but also you have to minimize scalability. And that's why Bitcoin can do maybe 5-7 transactions per second. And of course, less capability of the network translates into higher cost, because you have to have the same infrastructure running and process less transactions. So that's why Bitcoin on average, when the network is pretty in standard operation, not saturated, it may go for 50 cents, maybe $1. But then what we realize as we evolve in this process is that storing value and transferring value alone was not enough, because if we cannot have settlement of agreements between parties, and the settlement of agreements is done in centralized servers, we're going back to the old model. We are not trusting for the store of value and transfer of value, but we are starting to trust third parties for the execution of the business logic and agreements between parties. That's when layer 2 appears. And there's like the chief scientist of RSK created the first like Turing complete or logic settlement network in early 2013. Ethereum was announced in early 2014, although Ethereum was in production first than RSK. That is the evolutionary step of Sergio's original Quixcoin. So, but more or less at the same time, 2013, 2014, the idea started to emerge, like how we settle complex agreements between people on a decentralized network. And then the first examples in 2015 to 2018, the first second layer networks started to appear. And there are some architectural differences. For example, Ethereum chose to have the store of value and the agreement logic, the agreement settlement system in one network, while RSK decided to delegate the store of value function to Bitcoin and focus only on the settlement of agreements. But then we realized that any blockchain network, if it wants to retain decentralization, because that's another element in the mix, is like cannot scale further on certain levels, for the mere reason that if you scale transaction throughput to certain level, you will have blockchains that grow very, very fast. So let's say that a 400 transactions per year, 400 transactions per second network would grow at 1 terabyte per year. There are optimizations in the work in terms of compression, having transient information that will enable these to be smaller. But the problem is that the ethos of Bitcoin, for example, is that any person can download the software and validate the state of the network independently. So that's the level of decentralization. And again, decentralization is a gradient. It's not a discrete thing. No, it's not a binary. So you could choose to have more centralized networks and say, okay, I want to have a blockchain that will grow at 1 terabyte per year. That's not a problem if you are in business environments or corporate environments. So let's go for that. And we are sacrificing this ability of the regular user to be able to validate the network. So it's not like one model or the other. What we will see is that different networks will choose different centralization levels because they will be serving different purposes. If the blockchain is serving a consortium of corporations, then it makes total sense to expand the capabilities of the transaction throughput in that way. But at the same time, what you realize is that not all information needs to remain for the future of humanity, because some transactions are transient in nature. So you realize that the proper use of the blockchain is to use it for the things that you want to be really mutable and remain available for many, many years to come. And that all the other information ideally should happen within the boundaries of the parties intervening in the transaction. So that's when layer 3 in this model, no? Some people call it in the crypto space layer 2, but that's when layer 3, or what I call off-chain processing, happens. And how this layer 3, this off-chain processing happens is by the following mechanism. What you do is you anchor your peer-to-peer off-chain transactions. Off-chain transactions are the ones that don't happen on a blockchain. You anchor those transactions to a contract that is residing on the layer 2, on the agreement settlement layer. And based on that anchoring, you can start interacting with others and signing messages with your private keys, signing messages that are unforgeable, anchoring them to that base contract on the layer 2. So what happens is we can have multiple transactions that doesn't go to the blockchain. Therefore, they are extremely inexpensive. They can cost a fraction of a cent. And also we can scale, because this is exchange of information. There's no consensus settlement. There's no expenditure to secure the blockchain. So it's basically information exchanges, but are secure because they use cryptography and because they are anchored on the agreement settlement layer. And in that way, we only do settlements of the agreements and updates of the balances every now and then. And with that, what we have is, like, with this layer 3 of off-chain protocols, we can scale transaction throughput to tens of thousands of transactions per second, but also we can lower the transactional cost to a fraction of a cent. And this technology was not available in productive environments until last year. So all the things I'm relating have been developing in the last 10 years, 12 years. So it's like very early development of these technologies, but these technologies are a reality. When I started this presentation of the Internet of Value at the end of 2015, many of these things were only ideas or concepts, but they didn't have productive software. And now we are in a stage where we have productive software. And with the same concept of this off-chain payment processing, what we are seeing is that now we can build other kinds of systems that are not necessarily related to financial activity. So now we can have we can have decentralized storage where the incentives are run on a blockchain, on a centralized. We can have directory services or naming services that also run in a fully decentralized way, but they operate on a peer-to-peer environment, and they only use the blockchain layer to update the state of the named resolution, for example. And then we start having on top of that the application layer that uses all these protocols. So basically, this Internet of Value is enabling the creation of internet infrastructure that is purely peer-to-peer, that is structured around peer-to-peer marketplaces or sharing economies. And that's at the heart of what the REEF, the REEF or the RSK infrastructure protocols that we created, that all of them are plugged into a sharing economy engine where service providers and users can connect directly. But what are the implications of this Internet of Value? Well, as I said, there's like a process where we adapt technologies to what we know. So I think the first step is to create a digital twin of the world. So what we are doing is creating, now we have the ability of having scarcity, digital scarcity. So we can create digital entities that represent all the valuable things that exist in the world in a reliable way. No? So of course, identities, it's one thing that is being built, and we are redefining what identity is, in the sense that we in the past we were thinking of identity as the vouching of a state of somebody's identity or persona, but now we are moving into creating identities that are created out of social events. So the accumulation of social interactions and financial interactions can create identities that are trustable. if there's not a trust entity validating that that person is who they are. In any way, identity is always a social construct, because it's the combination of a doctor saying that you were born out of your mother, and your father and mother saying that that's your name in a typical traditional norm family. But so that all that combination of social interactions, then sanctioned by the registry of people in a nation, is what creates give born to our identity as we know it today. But we can extend that model with these new tools. Then, of course, we are creating digital twins of the assets in the world. Intellectual property, titles of ownerships, whether it's an art piece, these days like NFTs, there is a particular version of these certificates of ownerships is in trend in the art realm, but this is applicable to anything that requires a certificate of ownership. Of course, we can represent the stocks, the currencies, and we have today currencies as stable assets. And then, of course, the events. That's another thing, to have an immutable, reliable record of an event. But this is only incremental evolution, incremental improvement, but in some cases is giving birth to something that is interesting, that is only this creation of the digital twin of the world creates the possibility of regain control of certain tools that were part of the humanity tool chain and were lost in the past, like private money. So if you look all the bills that we have here, what they have in common is that they were created by private entities. Well, the one in the middle was created by is the first one of the first bills. It was created by a government of a province in China, but nonetheless, it was not a nation state issuing this bill. So the interesting thing is that money was private for most of its existence, and it became connected with the nation state maybe recently in the last 300 years, and stronger in the last 150 years. But some of these bills were minted by banks that were saying, okay, I'm issuing a 10-pound bill, and then I will have 10 pounds in gold, silver, or whatever backing in the bank arcs. So in that sense, money and state were connected very recently. And the main reason is that those private entities issuing the bills were, failing to honor their agreements. So they started like minting bills that were not, or printing bills that were not backed by assets. Although now the nation state currencies also don't have any backing; they are based on trust. No, they are fiat. But conceptually, I think these technologies will enable, economies like circular economies, communities, to regain the ability to create their own local money. And there are some experiments happen around that already. And also, I think with these technologies, we are seeing some interesting experiments around like doing the same, but with corporations. Corporations creating consortiums to create their own money, corporations' money, which is, I think, if you combine this with the cryptocurrencies, it's the two challenging models for the traditional fiat model based or circumscripted to the nation state model of central banks. So now we have three contenders playing the game of like build who creates money, and in that sense we have the nation state, we have cryptocurrencies, and then we have corporate and money created by corporations, like the Libra experiment. And this will be very interesting to see in the next decade how this plays out. But then we move into the following step. That is, now we can improve processes. So now we can do as we have reliable digital versions of the valuables of the world, we can start doing things that were not possible or efficient enough to be done with the traditional means. So now we can do progressive factoring. We can say, okay, if the shipment, if the goods are being still produced, then this invoice will have a discount of 5%. But if the logistic provider informs that by creating a trace of the event of receiving the goods into the truck, creates an event that the goods are on their way to the distribution center, then the factoring will go to 3%. And once it's on the distribution center ready for being consumed by the end user, we can reduce the factoring to 1% because the risk is very low. And there have been interesting experiences around these, like, for example, Kimberly-Clark reduced the time to understand like errors in the distribution chain from a couple of weeks in some regions to a day, to less than a day, to 6 hours, for example, only by doing incorporating this process improvement using this technology. And the 6 hours were because they were doing batching, but they could have like real time if they wanted realization of any mishap in the distribution channel. The other thing that is very interesting is we can start doing incremental compliance and taxing. So instead of doing AML, KYC for anybody the same, for everybody the same, in the same level, we can say if somebody's moving 100 bucks per month, let's only validate the phone number, for example. But if they start like moving, that's an important element for financial inclusion, because now we are lowering the entry point to the financial system. And we say, okay, when it reaches 100 or above until 400, it will be enough with an ID. And if it goes above 400, then we will ask for domiciliation. So we can create compliance frameworks, KYC and AML frameworks that are like, in accordance to the situation of the person being interacted with. So, and the same for taxing. If somebody is in a situation that they are barely making ends meet, then very likely, certain taxes you will redistribute back or to that person, because every buck that you give them back will be spent and will activate the economy and will improve the life quality of that person. So you can create progressive taxing models adapted to the needs of the person. And you can do that for certain types of goods, a lot of interesting things, because what we have now is programmable money. So we can start adding rules to the money. And of course, process automation, cost reduction, and improved transparency. No matter, I was talking about decentralization gradient, the levels of decentralization. No matter how decentralized a blockchain protocol is, open blockchains, blockchains that can be audited by anybody or are open in the network, have one common attribute, that is transparency. I would say the three main values or attributes of an open blockchain network are transparency, openness, and immutability, or sovereignty over your assets, assets and transactions and data. So transparency is a shared value among all of them, no matter how decentralized they are, no matter what's the security models or assumptions they have. And another interesting thing, this is like a little bit like overextending this, but this is happening already. So it's an interesting phenomenon. It's like now we have, if we think of our society, we have a programming language. The programming language of our society is the law. Then you can think that, the legal contracts are the programs of our society, and the computer that enforces those programs is the legal and law enforcement, the law enforcement system. It's like the judges, polices, and so basically we have all these elements, but what we are doing is porting this from a system based on the law enforcement model into a decentralized network enforcement model, where the programs are programmed in a programming language, much like Java or something similar to that. Those are the contracts. Now, instead of legal contracts, we call them smart contracts. We have a decentralized network that is enforcing the execution of these um, contracts, these agreements. And then you have the hackers of the system, that in the traditional system are the lawyers, and in these systems are the programmers. Although I think lawyers will become programmers as this evolves. And the interesting thing is that we can apply these rules to smart properties or smart objects. No, so now that's why I put that autonomous car there, because we can program that autonomous car with a wallet and certain programs where anytime we can paint it as a cab, as taxi, and people can jump in and start, like, riding through the street, paying with payment channels, with off-chain payment channels. They can pay by the second for the journey. And once they get down and close the door, the payment channel will close, and the autonomous taxi will keep rolling around the city and serving other customers. When the autonomous taxi is running out of fuel, we'll go to the nearest gas station. When their sensors detect that the tank is full, then it will pay from its own wallet, and once a month it will distribute the dividends to the owners of the car. So all the technological elements for doing that are there. And these can also be applied to smart grids, for electricity, to a myriad of things. So that's another very, I think, interesting realm. The other thing that is these technologies are doing are disrupting crowdfunding or funding of projects. And in 2017, we have a phenomenon called the ICOs, the initial coin offering, where like thousands of projects were funded from people across the world with crypto, and to a point that during a couple of years, VCs have almost no opportunity of like investing in the industry, because the industry was self-served by that model. And of course, as anything that is new, it was abused, and the ecosystem is like you know understanding and evolving that idea to manage better the political and economical rights of investors versus entrepreneurs. But that's a process, is part of evolution. You break things and then happen. And the other thing that is very interesting is, like, we know that Dunbar's evaluated that human beings can only create trust networks of 150 individuals, more or less. Primates have lesser capabilities. But with these technologies, we can start creating social contracts that can scale. So we can now have social contracts that we know will be enforced and respected in a huge scale. So we can go beyond our capabilities of social contracting with the trust model we have been using for all our existence, I would say, at least for the last 2 million years. So to finalize, I think I was talking about emerging patterns in the Internet of Information. I think one of the more interesting emerging pattern in the Internet of Value is reputation-based identities, because one of the reasons, there's multiple reasons, some are economic, but one of the key reasons why half of the population is excluded from the traditional financial system is because they don't have a collateral. So traditional risk assessment models are based on collateral. So if you don't have a car, you don't have a house, you don't have a formal paycheck, basically the financial system, the traditional financial system, cannot serve you. So what I see is that if we start creating traces, for example, of this, farmer from Nicaragua, so we create traces of each time he sells a new crop to somebody each time he buys the seeds or the nutrients he needs to do his work, every time he takes new training on how to on enhanced techniques for farming, all those things will start creating a reputation identity for him that will enable him to access better markets, because that will create trust. Even if I don't know him, I will know his track record in a reliable way, because these traces will be signed by him and the counterparty. So over time, they will be very difficult to cheat or to manipulate, and they are on an immutable ledger. So that will enable him to access better markets, which is key for taking people out of poverty, and also to access to the very basic financial services, to get a loan to buy new machinery or improve their business. So I think reputational based identities are the key for creating a financial system that is inclusive by design. And finally, I think this in combination, when we started RSK was back in the end of 2015, we wanted to create a financial system that would, serve 1 billion people excluded from the financial system. And we knew part of the thesis was that the World Bank has projected that by 2020, half of the unbanked people in the world will have a smartphone in their hands, and that's a reality. So if you combine that reality, you combine that, a billion or over 1 billion people has a smartphone, but has no access to financial services, with this Internet of Value that we are creating, that started with Bitcoin and has been evolving into a full financial system with smart contracts that can provide any financial service like lending, borrowing, securities, insurance, in a decentralized environment. We have a unique opportunity of creating this financial system that will serve any human being in the world, regardless of their current economic situation. A financial system that, as I like to say, will be inclusive by design. So thank you. I think with that, I finish my presentation, and we can open to questions.
Thank you, Diego. Yes, that's fascinating. Yeah. Is anyone that want to place any questions? Because I think we are running a little bit over time. From my perspective, Diego, I'm really grateful on behalf of the Blockchain Island, especially the enterprise working group. But for the fascinating subject of the digital twin of the world, and indeed, RSK's the infrastructure framework have the third layer. It can become quite technical, not just for the technology side. In this day and age, after we all been for quite a few years, I still try to wake up in the morning to say, how do I actually have our BTC, which is from RSK, is the same value of Bitcoin. But I think go back to what we do, if you don't mind me say so, and allow me, Ian, then is that we have a number of people like Barbara and John. What do you think, Diego, from RSK's perspective? We met literally in 3 different continents, from New York to Shanghai, from London to Hong Kong and Singapore. From your perspective, what do you see how the blockchain technology, and indeed from the RSK's infrastructure network, can help us in the enterprise perspective in Europe? You got John say he looking at an identity, the digital value of a aircraft. A 380 costs hundreds of millions. So what advice you can give us, and what help can you give us, please?
Well, I think all the technology we do at IOVlabs is open source, so it can be integrated into public networks or private networks. So that's one thing. We have one organization we funded called Extremian that is focusing on corporate and enterprise projects, and they are creating a management solution that is being launched now, There is an enterprise management, blockchain management system that enables any corporation to connect to all the major networks, RSK included, of course. But we think, again, with this vision of the Internet of Value, we think there will be a diversity of networks, and for each network might have some virtues or some strength. And so the idea is that we see a diverse environment. Then all the RIF protocols that basically solve the all the things that are around having financial activities. Like when you think about, of course, the scaling of payments is one, is the more obvious, is the one that fits within the RIF payments, is a set of protocols that scale payments, but also abstract payment processing from some complexities. For example, all the networks like Ethereum or RSK, because of the nature of decentralized open networks, need to have a native asset. In the case of RSK, is Bitcoin. In the case of Ethereum, is Ether. But for users to use the network, they have to pay in that asset. So if you, as a user, want to use a digital dollar or a digital euro, you are forced to have a secondary asset, and that's very, not user friendly. So RIF enveloping, for example, is a protocol that abstracts the user from that complexity. So enables, if you combine RIF enveloping with RIF aggregation or RIF payments, RIF payment channels, you can have a payment system that will provide the user with a user experience akin of a neobank, but using decentralized technology. So that's one thing, no? So how we scale, but also create user experiences akin to traditional financial services, retaining decentralization. Then you have RIF storage. RIF storage acknowledge that the blockchain is not the correct place to save sensitive data, because once you put it there, you cannot delete it. There's no right to oblivion, certain things that are needed in many environments. So RIF storage is a decentralized encrypted storage network in parallel to the blockchain network that enables you to stamp or create proof of validity of the data on the blockchain, but has the actual data into these separate protocols and networks. So in that way, if we are doing, for example, all the sensitive data about the airplane and everything can be stored in this secure encrypted environment with redundancy, so you can have multiple copies over the networks or different networks, and then you know the validity of the data going to the blockchain, and also you do all the economic coordination on the blockchain. So you leave the blockchain for economic coordination, but you have the data on a decentralized storage data. That's RIF storage. Then you have RIF gateways. That enables you to create gateways between traditional systems and blockchain systems. So you have a two-way communication, like triggering events on external systems based on blockchain events, or the other way around, like inputting information from outside into the blockchain in a reliable way, no? Because so smart contracts can make decisions on information that doesn't live within the blockchain. So that's RIF gateways. Then you have RIF communications, that is like a shared component to all these protocols, because you want to have secure communications between servers to make sure that they cannot be hacked, they cannot be compromised. But those communication protocols can be used also by the users, integrated into solutions. So you have a secure communication network where you have all the communications encrypted, and you can use the APIs to build your own communication applications. So we have storage, payments, gateways, communications, and the last one is RIF identity or name services, where we have decentralized or blockchain-based naming services and these identity constructs I was mentioning. So you can use all that toolkit, and Extremium can help, for example, on using all these components, both on the public environment or a private environment, and the solution, the RSK Cloud solution, will enable corporations also to deploy their own private networks using RSK technology and all these protocols. So I think that's, I think it's complex, like you say, Kraken, and regarding RBTC that you were mentioning, is like the native RBTC is BTCs or Bitcoins on the RSK network. In the design of RSK doesn't have its own currency. It uses Bitcoin as a native currency, and it does that by creating what is called a sidechain. So basically, RSK is secured by the Bitcoin network, by the Bitcoin miner. So currently, 60%, sometimes up to 80% of the Bitcoin miners are protecting both Bitcoin and RSK. Indeed, if you go to the blockchain explorer of Bitcoin and put RSK, you will see all the blocks that have been merge mined between RSK and Bitcoin. That's why the public network of RSK is considered the safest blockchain after Bitcoin. No, it's like currently has 60% of the security infrastructure of Bitcoin protecting it on an ongoing basis. So that's simply, there's a mechanism where you can send your Bitcoins and you will get Bitcoins from Bitcoin and get Bitcoins on RSK, and you can use them to pay the fees of the network and run smart contracts, run any operation on the network. But as I said, in corporate environments, we are working on solutions that will abstract even the corporations from these complexities. So the corporation can use the platform as they would use any other platform without caring about these inner workings, if there's Bitcoin underneath or...
Diego, I'll just ask you a question because that was my question, right, regarding running smart contracts on the Bitcoin network. You must have an arrangement then with the miners. Did you pay them fees to run your smart contracts on their network?
Yes, how it works is like, it's not that we have a contractual agreement with them. It's like what we do is we modify the software, the mining software for Bitcoin in a way where when the miners choose to run that modified software, they start protecting two networks at the same time. And what we do is we use the byproduct of the Bitcoin mining to secure intermediate blocks in RSK. For example, in RSK, blocks are validated every 30 seconds instead of 10 minutes like Bitcoin. But eventually, now with 60%, eventually every 2 blocks of Bitcoin, you have a block in RSK that has the same security as Bitcoin. So you have like intermediate validations with intermediate level of security, and every 20 minutes you have the same security as Bitcoin. So you have you seal all the previous transactions to the same level as Bitcoin.
Very smart. I have one more question if you have time. Is that okay?
Yeah, absolutely.
Just curious, right? So, I mean, it looks like the products you have is to both help the unbanked, right? Because you speak about identity, particularly, and you mentioned the World Bank, there's something like 1.7 billion people unbanked, and one of the reasons they don't have identity, right? And reputation identity is pretty good. But also, are you looking to offer services to the banked? Because there's people who are banked, and perhaps you've stories in Argentina, if you had time, you could share, where the current financial infrastructure that was there was that people didn't trust it, and they ended up keeping money under the mattress, so to speak. And then maybe that money under the mattress was eviscerated through hyperinflation and so on. So you're looking also to service the people who are unbanked to get them into finances, as well as people who have and offer them much better financial services.
Yes, and I think that's why we don't design a financial system for the poor. We design a system that will, that's why I like to say that it's inclusive by design, because it's a system that any human being will want to use, because it will be more efficient than the current one, more interoperable, open, but will also provide services for those who are unbanked today. So it's like, it's more about creating like an evolutionary step to the, and indeed, we are working with governments today to, for example, provide identity to the citizens, regardless of their economic situation. We have a project for driver's license, and the idea is then to integrate. Once you have identity, you can start integrating to all the e-government systems, those services. We talk to some companies, House of Companies, as well, for the registry of companies. So we don't, I mean, we started with this focus, so all our solutions can work in the, if you want, the harshest environments, because it's like the unbanked is, they don't have money, they cannot afford to pay recurrent fees, so we build our technology to function there, but it can serve any human being in the world, and we are working with governments and corporations as well. So Yes.
Well, your answer there, because you asked about enterprise, right? If you give people identity that they don't have identity, some of these people actually have assets, valuable assets with no identity.
Yes.
You then can offer them loans because you can secure against them loans, or maybe if they have nothing but they have savings. And if you have a billion people with a small savings, that's tens of billions of dollars. So people would be interested in maybe offering them interest on that or something like that. So they could even get paid for their fees. Yeah.
And if you think about it, also SMEs are underserved. In Latin America, SMEs are, are very underserved. They don't have access to financing. So it's not a problem only of those excluded. I think it's like we have a crisis. I mean, for example, if you go to the Caribbean, there is due to some the risking the banks are doing, they are unbanking middle class people as well. So it's like, I think we have quite a big crisis in general with the traditional financial system. So yes. Yeah. This can be a solution for everybody,
We could have hyperinflation in Europe yet, so yeah, we may need your services for sure.
As I said, this is quite a complex issue, and I think, as Ian said, we are running a little bit more than over the time.
Yes.
But I hope that Diego, maybe in the near future, you can also be more focused to explain to us. From my perspective, at least, then is that I don't often get an opportunity to go down to Latin America, but you've been here. We last met in London and so on. We'd like to know from RSK's perspective, then, is that what we should do using blockchain, especially say in this group for enterprises, and there are other groups like startups. I know my own business, one of them at least, like what Barbara's interested. She's very passionate about education in the technology as much as in energy, as she said. Maybe she have a quick question.
Thank you, Kraken. I actually don't have a question, but I just wanted to thank you, Diego, for the whole presentation, and especially the second half of the presentation, because what you're talking about, like actually being inclusive, including all people in the world into or providing the technical solutions to everybody, basically, that's actually very much what I am working on. So I can only agree, what you were talking about. So thank you so much.
No, my pleasure, but I think that's my passion and my purpose in life. So I think the organization is very aligned with what we want to achieve, and of course, you have to build the foundations. No, that's what we have been doing. Our final goal is to, and we are doing it now. We have some experiments in the slums in Buenos Aires. People is sending money back to their homes from Argentina to Venezuela. So we are having the first experiments of the use of this technology in the real, the territory, and helping people's life. But it was kind of a detour, because we started with this idea in 2014, then we did some experiments, then we realized that Bitcoin alone was not enough. We needed to extend Bitcoin. Now that extension is live for a couple of years, and now we are seeing the first. So it has been a long journey, but I think it's worthy. It's like when you see the results, it's very, very fulfilling. So.
Very much so. Sorry, Ian, is anything that you think we should cover? Because
we just ask you questions, Diego, because I pretty don't have time, but fascinating. So thank you very much. Thank you.
I'm happy to be back, and
we have to
maybe cover more technical topics.
Too easy with questions. I have lots more questions.
On that note, Diego, once again, we are all grateful for your time. As I explained, toward the end of next month, in May, the Blockchain Island, we have each year have a Blockchain Island week. We are welcome for any specific agenda from the educational side. No doubt you might want to promote certain aspect of your technology or your principle on that. You might even go to sponsor a hackathon.
Yes.
Am I correct to understand that RSK also got a innovation fund? So from the startup's point of view, it's no harm done to put a few $100,000 to each project.
No, we have an ecosystem fund Also, we have an academy, the RSK Academy, where we have been doing videos, explaining the use of the technology, programming. We ran a couple hackathons, one very successful last year, where projects, very interesting projects emerged. So we will be very happy to do something together on that front as well.
That's fantastic. Yeah.
Amazing.
Anyway, Ian, it is your group. Please
sign off. Is it?
If you want to sign out, but once again, it's okay for Diego. He's 4 hours behind us. Yeah.
Listen.
So thank you for everybody coming today. I'm sorry, my internet connection is a little bit iffy today. So we hope to see you again, Diego, probably in May, if not before. So have a very late Easter, and we see you very soon. Thank you so much.
Likewise, big pleasure.
Thanks, Diego. Bye-bye.
Bye-bye.
Thank you.
Thank you.